Hello everyone, welcome to my channel. So today I am coming up with another part of financial management, that is part 3, when I am going to cover all the topics. Before showing you all the topics in my today's lecture, I am going to tell you that I have already covered many important topics of financial management, like what is financial management, the finance function, and the most importantly the 4 important decision. I have already told you that depends on these 4 important decision the entire financial management is based on. So apart from that, the question that is frequent that are going to give me, that is frequently coming in an exam, is what are the roles of a financial manager. This I have already been discussed in my last 2 videos. So my suggestion is that please go to my watch list of financial management, playlist of financial management, and watch the videos there. If you have any problem, so please let me know through comments, so that I will be able to know that you are facing this kind of problem, and I'm going to solve the problem as much as I can through my capability. So today I'm going to cover all these topics that are: number 1, financial goal. What are the goals of financial? Mainly there are 2 goals of financial management, that is profit maximization and wealth maximization, and there are some limitation of profit maximization, which the topic that I'm going to cover today. So what is the role, without wasting any further time, I'm directly coming to my today's lecture, and the first topic of today's lecture is financial goal. What are the 2 financial goals? Number 1, profit maximization. You all know what is profit and maximizing the profit. You all know. Here the interesting thing is that wealth maximization. Many of us will be able to start thinking that wealth maximization means the individual wealth or the organization wealth or the employee's wealth. No, it's the shareholders' wealth. If we want to maximize our shareholders' wealth, then the image of the organization will increase in the share market, and it will help the organization in near future. Because shareholder is the main important part of any organization, because they are the person who are controlling the image of the organization. So here the wealth maximization is shareholders' wealth. So now what is financial goal? First topic is profit maximization. Financial goal first is profit maximization. We all know what is profit maximization. Maximizing the rupee income of the firm. That is, suppose I'm working in a financial organization of ABC Limited company, and I am having in my hand a project A project, and there I am on behalf of my organization, I am taking a decision that I am going to invest 50,000, as I am thinking that in near future it will give a return of 1,50,000. So I am going to invest 50,000 on behalf of the organization as a financial manager. So after 1 year, I am getting 1,50,000. So these 1 lakh rupees that I am getting from that after investing in that project, the 50,000 rupees that I am getting is my profit. Is not my profit, is the organization's profit. Is maximizing the rupee income of the firm. Clear? This is how every organization maximizes the rupee income. So in the economic theory, the behavior of the firm is analyzed in terms of profit maximization. Yes, this is something in terms of economics, which I want to keep aside this entire sentence. So here it will not be applicable. In economics, when I am going to tell you, I will tell you what is profit maximization in terms of economics. So important thing is that while maximizing profit, a firm either produce maximum output for a given amount of input, or use minimum input for producing a given output. This is the main thing. As we all know, nowadays this is a competitive market. competition is all around the market. Without competition, so every firm must keep these things in their mind, that how to maximize output with their given amount of resources. Input means resources. Because if the firm is reducing their cost, is going to reduce their cost and increase their sales, then only the profit will create. Then will be profit, then only they will be able to sustain in the long run. Because profit is not the I am going to tell you, everyone knows that profit is not going to take not the ultimate motive of the firm. Profit, if a firm wants to earn profit more and more in this competitive era, they will not be able to sustain for a long time, because everything depends nowadays on the consumer. Because if suppose A firm is selling a product and B firm is selling the same product, A firm is selling the product on rupees 50 and B firm is going to sell that same product on rupees 20. No matter what the image of the A firm in the market, the consumer will next day directly shift to B firm, because the products are identical, and B firm is going to sell that, is selling that product on rupees 20, which is 30 rupees less than A firm. Everything nowadays depends on consumer. No matter what the image of the firm. Yes, brand image is something different, which I am going to tell you from when I am going to teach you about marketing. Let me keep aside this. But every organization nowadays wants to reduce their cost by maximizing output for a given amount of resources, or with minimum resources they want to produce a given amount of output. Every organization is now thinking on this, because this is the secret of profit creation. Apart from that, logic of profit maximization is efficiency. Here also efficiency. All the managers who are going to work for an organization, whether they will be efficient to create this profit by utilizing this secret information, by utilizing this secret method, is their efficiency. How? Efficiency means actually output upon input. How to maximum output with minimum input. This is the efficiency. Logic profit maximization is efficiency and nothing else. So as I have told you beforehand only, so there will be three disadvantage, or there will be three, limitation of profit maximization. That is, number one, it is vague. Just look at the word vague. It is vague? How it is vague? Because here the profit is not clearly defined which type of profit, like PAT, profit, whether there will be profit after tax or profit before tax. Which type of profit we are going to get, it is not clearly defined is profit maximization. This is one of the limitation, and that is why profit maximization is a vague, because it does not clearly define which type of profit. There are many types of profit. Profit before tax, PBT, profit after tax, PAT. We don't know which kind of profit is going to consider here. So that is why it is vague. Number two, it ignores the time of returns. Yes, times of return. It's the main important another important terms, times of return, because we all know that value of money changes with time. Now the present value of rupees 100 will not be the same after 1 year. The present future value of rupees 100 will not be the same as present value of rupees 100. So profit maximization directly ignores this timing of returns. That is, it does not consider the time value of money. So this is just an impossible, because we all know that today the value of rupees 100 will not be the same after 1 year. So here it just ignores the timing of returns, which is not possible. Apart from that, it ignores risk. Suppose I am having 2 projects, and there will be, before investing in these 2 projects, I'm taking a risk there, because before investing I don't know which project will give me a higher return. It's my assumption that project A will give me a high return, but in near future it may not happen. It's my mistake, it's my misassumption that I'm investing on project A. So it's ignore risk. Profit maximization ignores risk, but the more risk we are going to take, the more return we are going to get. Because risk is one of the factor of every business. Every business is having some kind of risk. Suppose I am getting 50,000 from shareholders. I am collecting 50,000 from shareholders, and now I'm not going to take. I'm keeping the money in my bank account just for nothing. Just for nothing, I'm going to keep that 50% in my bank account without using. I'm just keeping that money. This is not be possible, because if I am going to collect that money and just keep it like that in my bank, in any organization's bank account, then it will not be efficient. Because after collecting the money, for what purpose we are collecting the money for shareholders? After getting the money, we are going to invest that in to expand my business. So it just directly, no matter what the risk will be, if we do not invest in any kind of project or else, then how will our business will expand in near future? So just profit maximization, just ignore the risk, but there will be a risk. But if we do not take risk, then we do not get return. Risk has to be there. The more risk we have, the more return we are going to get. But it ignores risk, which is not efficient, not approvable. Apart from that, and the last topic I'm going to cover today is wealth maximization. This is also very important role or goal of financial management, wealth maximization. In my first sentence only, I'm starting with SWM. That is, the full form of SWM is shareholders wealth maximization. Maximizing the shareholder net present value or wealth of a course of action to shareholder. That is how to maximize the NPV, which I am going to give you detailed explanation about NPV in my next video. So here only, maximizing the net present value of a shareholder. How to maximize shareholders' wealth. NPV is the difference between present value of benefits minus present value of cost. Present value of benefits. Suppose what is the present value of benefits and what is the present value of cost. And I'm going to give you a lot of example when I'm going to tell you about NPV, but let here just look at what NPV means. Difference between present value of benefits and present value of cost is just a financial action that is positive. NPV creates shareholders wealth that is desirable. Wealth of a shareholder increase share market value of share. Yes, when there will be a positive NPV, net present value, it will create shareholders wealth, and when there will be a less negative NPV, it will destroy shareholders wealth. Suppose if NPV is more, it will create shareholders wealth. Wealth means when wealth of a shareholder will increase, share of market value will also increase. And if there is a negative NPV that destroys shareholders wealth, then the market value of share will also decrease. I'm going to give you a detailed explanation about NPV in my near video. Here just wealth maximization, how to maximize wealth. Just keep that thing in mind, how to maximization wealth. Open wealth maximization. And the SWM, shareholders wealth maximization principle, fundamental objective of a firm is to maximize the market value of share. Obviously, the main or the fundamental objective of any organization is to maximize the market value of its share, because if the market value of the firm's share will increase, it will create a better image in the share market, and it will affect in the shareholders' mind. They will think that the firm is in a good shape, and they will start investing more and more for that organization, and it will be a great benefit for that organization. So maximum NPV is equal to present value of benefits minus present value of cost. What will be the benefit, the value of benefit that we are getting from a project, the present value of that benefit, and the present value of the cost. What are the costs that we are going to give for that? What are the costs that we are going to need for that project? This is just minus it, present value of benefits and present value of cost, and it will get it will come maximum NPV, net present value. So present value of NPV and present value of benefits, present value of cost, all will be discussed in my next videos in a detailed way. Here just keep in mind that wealth maximization means how to maximize the wealth of a shareholders, and if positive NPV is there, it will create shareholders wealth. That will be increasing of wealth, means market value of share of that organization will also increase. And if it is negative, that it will destroy shareholders wealth, and share of market value of that organization will decrease. And the fundamental objective of every organization is how to maximize the market value of share through shareholders wealth maximization. This is the funda of the wealth maximization here. So this is all today. Thank you. And if you like my videos, again I'm going to tell you that if you like my videos, please like and share my channel. So thank you, and the next video will be coming soon. So good night and thank you all.